If you're watching this, you've probably seen traders making money online and thought, could I do that? The answer is yes, but not the way you think. 90% of beginners lose money because they jump in without understanding the basics. In this video, I'm taking you from complete beginner to your first demo trade. You'll learn what trading actually is, the terminology that confused me for months, which style fits your life, and exactly how to practice without losing a penny. By the end, you'll have a clear roadmap to start your trading journey the right way. Not as another statistic, but as somebody building real skills. This is the video I wish existed when I started. Let's start with the basics. What is trading? And why are there people making millions while others lose everything? The simple definition of trading, guys, is just the act of buying or selling something. You could be trading an iPhone for cash or cash for an iPhone, or trading, I don't know, rocks for grass. A trade really could be anything. And the kind of trading that we're doing is buying and selling usually digital products or digitalized things such as stocks, crypto, stuff like that, and then selling it, usually hoping to make a profit. You're buying here and you're hoping to sell higher. There is, of course, a big difference between trading and investing. If you're not aware of the difference, it's just that trading is short term and investing is longer term. If you wanted to buy some Apple stock and hold it for a decade, that would be an investment. If you wanted to hold Bitcoin for, forever until the financial system collapses, then that'd be an investment, as opposed to a trade, which would be, I think Apple is going to go up today or this week, so I'm going to buy it and then sell it in the next couple of days, hoping to make a profit. Traders make money from price movements, not from dividends. They make money because they're speculating price will move to a certain direction, and whenever they're right, they're making profit. It's really that simple. The reality check is, guys, this is a skill-based business. This is not gambling. This is not hoping that it works. This is not hoping for one big, crazy trade that makes up for all your losing trades and makes you retired. This is not GameStop. This is not meme coins. This is a professional skill that requires professional levels of discipline and seriousness for you to succeed, or else you're going to end up as a statistic. This is also not passive income. You cannot just invest, 1 hour per month and expect to make 6 figures a month tomorrow. This is not how this works. You cannot get rich quick. There is no such thing as get rich quick in life. Of course, there are get rich quicker, business models out there, of course, than working 50 years to potentially make $1 million. But even then, it's not really worth doing that, in my opinion, the whole 9-to-5 route if you want to make $1 million, because you're going to be old and it's really just going to be locked up in your retirement fund. So not what I would recommend, but of course, if you want to get rich quicker, I would recommend something that will allow you to make $1 million out over 50 years, but maybe over 5 years. If you have a multi-year kind of horizon for your trading and for any business you're going to be starting or anything you're going to be doing, it's going to be a lot easier than if you have a few days or a few months to make it work. You do need to give yourself time because there will be a learning curve. And of course, after the learning curve, then there's going to be time where you're going to have good months, bad months, and we're going to be scaling. So how much time do you really need to invest? Is trading a full-time thing? It's not. Trading is not full-time. Trading does not require 8 hours a day. But if you have at least 2 hours a day, you will be able to move along faster than those that don't. If you can invest 2 to 3 hours a day learning and mastering the skill set, in a few months, you will notice a big difference. If you have a couple of hours a week, you're still going to be able to get a lot of progress done. Don't think that just because you're really busy, you shouldn't start this at all. It's better for you to start and do the right things than for you to do nothing. Most people put in 6-8 hours a day for multiple years and don't succeed. If you're to put in a few hours a week, but into the right things, which will give you the right results, in a year you will be getting much better results than those that put in 100 times more hours than you in the wrong things. You might have certain income expectations, of course, based off what you're seeing on Instagram, TikTok, YouTube, so on and so forth, and you should probably just throw that right out of the window because most of that is bullshit. Everything you've seen online is most likely bullshit so that they can sell you something which is, once again, unrealistic. If you've seen somebody, quote unquote, turn $100 into $1 million in just a few days or in a month, let's just say it's not real. Because if it was, well, he wouldn't be making videos. There'd be no point in him doing that. He would just continuously do that. And if he could flip $100 to $1 million, why doesn't he flip $1 million into $1 billion? That is, unfortunately, the reality of trading. It's very easy to fake a lot of things. So then what should you be expecting whenever it comes down to, profit from your trading? Well, you shouldn't be expecting to make any money in your first few months, depending on how much time you're going to be investing. At least your first month or two, you shouldn't have any sort of expectations. Starting month 3, you could start to make profits, but it won't be 10 or 50K a month unless you've built really good habits and you already have a good amount of capital to start off with. By a good amount of capital, I don't mean 6 figures. I mean a couple $1,000s that you're happy to actually invest into this and see go straight to what we call market tuition. In other words, into the endless void that is the markets. It's normal for you to lose some money with trading at first because, that's what it is. You make money, you lose money. Whenever you make money, usually somebody else is losing money. So don't expect to make too much to start off with. And once you actually do have the right skill set and you can scale up, you can go very quickly from $0 a month to $10K a month month within, let's say, a couple of months realistically, once you've actually gone live and you've gone the right practice. And then to scale from 10K to 50K a month really just takes you getting a couple more accounts and changing your risk a little bit. Now, before we go further, let me destroy some myths that will save you thousands of dollars and years of frustration. One of the first myths that I've heard whenever I started off, and that I still hear for some reason, is you need at least $25,000 to start day trading, which in some cases is true if you want to work with a regulated broker and trade options. But literally nobody in this planet should ever trade options to start off with. It makes absolutely no sense. It's going to take you at least double, if not triple, the amount of time and money so that you can actually learn. You're going to lose a lot more, and you're not even going to make as much as you would if you were to learn something different. So no, you don't need $25,000. You need $0 and a bit of time. Right now, the time you're investing to watch this video is all you really need to actually start to learn trading. And then, like I said, I'm going to show you how you can start to practice trading with no money, taking on no risk. And then when you're ready, you can start off with very low risk, even just $10 or $50. The more money you have, of course, the better, but you don't need to have 25K to start. Another myth is that trading is gambling. Meanwhile, it's just calculated risk. You're basically looking over data, looking over patterns, spotting them, gathering data, optimizing it, and then utilizing it to execute based off of what you've seen. That doesn't sound like gambling to me. It sounds like mathematically led decisions based off of statistics, which is basically the opposite of gambling. Another myth that I've heard quite a lot is that you need super complex strategies. Meanwhile, simplicity always wins. The simpler the strategy, usually the better it's going to be. You've seen the meme, I'm sure, a bunch of times if you've been around for a little while, that people start off with trading, they have these charts with these millions of lines and all these indicators and these crazy things going on, and they don't understand what the fuck's going on. They're not making money. They think they know what's going on, but they really don't. And then somebody that's been trading for multiple years that's making actual money in the markets has literally nothing on their charts. It's just plain buck naked with maybe one or two things, and that's it. Another myth, which I find really funny, because I did believe this when I started, was more screens equals more money. Now, why do people think that? Because they think if you're looking at a bunch of screens, a bunch of charts, you're going to see more opportunities. Meanwhile, it's just going to confuse you. One thing that I've seen a lot in the stock trading world is that they have one just to, scan a whole bunch of different pairs. They have another one to look at 4 charts, another one to have their DOM, to have, all their execution stuff, and to have the news. So sure, if you want to be a schizophrenic looking ass trader, looking at a million different things at the same time, burning out your brain, your eyes, and not making any money, obviously you can make money with this, but it'll be a lot harder, then do it, all right? Or just use a basic ass laptop or computer or even your phone to start off with and make more money than those which buy those 6 screens and just are trapped in an analysis paralysis forever. And of course, the one that I mentioned earlier, the whole full-time or nothing. You can start with very little time, with basically no capital. I've seen people start trading in Nigeria with no money, with a little bit of time, trying to support their parents, support their village, do their thing, and they didn't manage to succeed right away, obviously, because they had almost no capital, they didn't have much time, but they were dedicated to it. And many months down the line, they managed to actually build their own strategy which worked really well. And then they managed to find people which were willing to fund their trading for a split of their profits. And next thing they knew, that person, which was used to making $50 a month in Nigeria, 50 to 200 is their usual kind of salary, they're making now thousands of dollars a month in payouts, and now they're scaling up their own accounts. So it's win-win. Somebody funds them, gets access to their strategy, gets to use it themselves, gets a cut of the profits, and of course, the trader himself gets to actually have capital and completely change his life. So no, you don't need to have a ton of time or a ton of money to make this work. You just need to be dedicated and to put in the right time into the right things. Speaking of expectations, let me show you what a real trading journey actually looks like. Spoiler, it's not what you see on Instagram typically. The realistic timeline that most people go through, month 1 through 6, really is you just learning and losing. It's just learning and losing, learning and losing. That's it. You're basically just trying to learn things, you're watching videos, you're trying to apply it, and you're losing money. This is your education phase. Then months 7 through 12, you're going to be more or less break even. This is where you're going to really build your skill, and this is where you're going to start to understand trading a lot better, remove all this bullshit from your charts, and start to journal. Then year 2 is when you're going to start to get consistently small profits. In year 3 and beyond, you're going to be scaling and hitting your main goals. This is a kind of average timeline that you don't have to go through. By the way, don't click off this video and think, I'm not going to wait 3 years to make money. You can easily make this whole 3-year timeline into 3 months if you do it properly. In the end, your goal is just a smooth, clean equity curve. You don't want to have a month where it goes up, the next month where it goes down, the next month where it goes up triple, and then it's right back to where you were. You want it to slowly, steadily go up. That's what you want, and that's the goal. And is it realistic? Is it possible for anyone to do? The answer is Yes. And if you want structured guidance on your trading journey, I have a completely free course that goes deeper into everything that I'm covering today. You can also book a call with me if you want personalized help getting started. Both links are down in the description. Now, let's dive into the markets you can actually trade. There are dozens of markets you could trade, but as a beginner, you need to pick one and master it. Let me break down your options. There's going to be Forex, which is the foreign exchange markets. I use the words CFD and Forex interchangeably, so just keep that in mind. Forex is usually going to be available 23 hours a day, 5 days of the week. It's going to be highly liquid because it's one of the most traded markets out there. You don't really have a minimum amount of capital you need to start off with. You could even put in $10 and you'll be good. It's quite good for flexible schedules and those which are looking to scale up without a whole lot of paperwork. And then there's going to be stocks, which I don't really recommend for anybody because it's very difficult to actually get into it and to actually get really good at one thing. They're not going to be available nearly as much as the Forex markets because it's going to be based off an actual session, an actual stock market, which is going to be based in one place in the world, such as New York, London, or it could be Tokyo or Sydney, etc. So I don't really recommend it because of that. It's also very difficult to actually get started in trading stocks because you're not going to have as much leverage. You're also going to be limited based off your region. It's going to be more difficult to get started, and that's where the PDT rule, in other words, needing $25,000 to start the trade, really does come in. And so it's not something I recommend to many people at all, even though most people, when they think of trading, they think of stocks. Then there's crypto, which is 24/7. I call it the degenerate markets. There's a lot of volatility. It's a newer market, and it's quite good if you have, well, lots of risk tolerance and you're looking to trade at all times. Then there's futures/indices. Indices can be traded on CFDs, just so that you're aware. So CFDs is contracts for difference, if I'm not mistaken, and it basically allows you to trade everything we've just talked about: some stocks, some indices, some crypto, some currencies, which is basically Forex altogether. And then there's futures, which is going to be the more regulated version of CFDs. So what are futures? Well, it's very similar to CFDs, but it's all centralized. It's the Chicago Mercantile Exchange, which allows you to trade futures. In other words, it's one entity, kind of like the New York Stock Exchange, where it's grabbing all of the data where all the trades are going. So it's highly liquid. There's a lot more leverage available. It's a very professional environment, and it's going to be best for serious traders that want to have very reliable data feeds and be able to scalp on lower time frames. My recommendation for beginners is going to be some sort of mix of futures and Forex. Crypto can be good, stocks can be good, but they're not nearly as good as CFDs or futures. But choosing your trading style is critical. This determines your entire lifestyle. Scalping is a style of trading which has you holding trades for seconds to minutes. You could be taking 10 to 100 trades a day very easily. You obviously don't have to, but you can. Your time commitment, if you want to be a serious scalper, would be 2 to 4 hours a day of intense focus. This is not necessary, as I've spoken about in my previous videos. You could scalp technically a few minutes a day. You could scalp and only have a few minutes a day of screen time and still make quite a lot of money. Just depends whether you want to be an active scalper or if you want to be a passive scalper. The personality fit for this is going to be somebody which is good at making quick decisions and has a high stress tolerance. Then day trading, which is the most popular form of trading out there, is going to be holding usually for minutes to hours. You could pretty much be taking between 1 to 10 trades per day on average, depending on what kind of rules you have and how many pairs you're looking at. Your time commitment could be very similar to scalping. It just really depends on how you're going to work with it. The personality fit is going to be somebody that is disciplined and patient. Then swing trading, which is a very good way of trading if you ask me, but not as efficient as day trading or scalping, is going to be holding for days to weeks. Your trades per week could be between 1 to 5, which is a big difference to scalping, which could be up to 100 a day. Your time commitment could be between 30 to 60 minutes daily. It really depends how many trades you're managing and how quickly those are playing out. Personality fit's going to be somebody which is patient and wants less screen time. Then position trading, which is very similar to investing, is going to be somebody that's very patient that wants basically no screen time at all. Then position trading is kind of like swing trading, but for a very long time. It's a mix between swing trading and investing. You could be holding for weeks to months. Your time commitment is just going to be a few hours a week for you to just look over your positions and make sure that you're good. Personality fit's going to be big picture thinkers, people that have a lot of capital and want to be mostly hands off, but not so hands off that it's investing. Now here's something that most beginners don't know about. Prop firms, the shortcut to trading bigger money without risking your life savings. The real question to start off with is, well, what is a prop firm? These are basically companies that fund traders. You're able to trade with their capital and you keep between 70% to sometimes even 100% of what you make. How it works is you basically purchase access to a challenge that allows you to prove your trading skills. Once you pass their challenge, they give you a funded account, which could be between a 5K account all the way up to a 400K account. And then you just need to trade and earn. I would recommend prop firms for literally everybody because because your costs are going to be so minimal compared to what you're going to be able to make. Let's say you wanted to get a $100,000 account. You pay for the evaluation. It's going to cost you about $500. Once you actually pass it, if you were to make 10%, you would make $10,000. If you keep 90%, that's $9,000. Spend $500, make $9,000. And after you get paid, it's not like they remove your account. You still have access to it, and you can just continue to make money consistently on that until you lose it, which should never happen if you have the right risk management, which I made a whole video on that on my YouTube channel. Think about it like this. You either take $500 and you risk 1% per trade and you make $5 a trade, or you take the 500, you buy a 100K account, and when you risk 1% per trade, you're making 1,000. Pretty big difference. Then again, everything I just told you doesn't mean anything if you can't read a chart. Let me show you the only 3 things that matter. You need to understand what candlesticks are, because without that, you're going to be useless. The body is the open to the close. The wicks are the highs and the lows. Whenever your candlestick is green, it means it went up, and whenever it's red, it means we went down. It's that simple. If you need more help understanding it, then I'd recommend looking at my free course, which is linked in my description, where I explain it in more depth. An uptrend just means we're getting higher highs and higher lows, and a downtrend is the other way. We're having lower highs and lower lows. And a range is going to be sideways markets, where we're not making higher highs or higher lows. Once you can read structure, you need to identify the 2 most important levels on any chart. Support and resistance is the easiest way for you to start to understand the markets. When you start to make a floor and we continue to go back to a level and we keep going higher, this right here is called support, right? Supporting price, and it helps it go up. Resistance is the other way. Every time we hit this level, we're continuing to reject off of it. That's resistance. If this is support and this is resistance, then this would be the market's moving. If you buy at support and you sell at resistance, you're going to make money. The easiest way to identify these is waiting for at least 3 clear touches where we're hitting either support or resistance. And ideally, the rejections are very clear. We hit it and then we go right back up, or we hit resistance and we go right back down. Now let me show you the simple trend identification method that will keep you on the right side of the market at all times. There are 3 trend states. There's an uptrend, which means you should only be buying. Then there's downtrends, which you should only be selling because we're going down constantly. And finally, well, there's no trend, which is sideways like we were talking about earlier, which means you should not be trading, or you should be zooming in closer so that you can find trends. Some simple trend tools to identify whether we're going up or down is going to be moving averages, trend lines, and also just price action, looking at higher highs or lower highs. Theory is great, but nothing beats hands-on practice. Let me walk you through setting up your first demo account. I would recommend you just download TradingView, which you should already be familiar with if you've been trading for a couple of days or you heard about it for a couple of days. This is a free application on your phone or on your computer or website that you can look at all of the charts for free. You can look at different markets. You can look at stuff like the moving averages. You can draw trend lines, etc. And best of all, you can do paper trading, in other words, demo trading, straight on their platform. So just go into their platform, click on paper trading, open up your account. You can choose any sort of size. I'd recommend a round number like 1,000, 10,000, or 100,000, and just leave it at that and you're ready to go. With your demo ready, here's your exact checklist for taking your first practice trade. Before you take your trade, you need to be looking at the market trend. Are we going up? Are we going down? Are we sideways? Then start to identify key levels which are going to work based off of this bias that you have, based off the trend. In other words, if you can see we're clearly in an uptrend, then you should be looking for support levels so that we go up, go back a little bit, and then you buy as we're hitting support so that you can make money as it goes up. Then you need to wait for your setup. Set a very clear entry point, wait for clear signal confirmation once we actually hit support and start to bounce off of it, for example. And then you need to have your position sizing set to 1% risk per trade. You don't want to be risking more than 1% of your account to start off with. And it's also a really easy way for you to track your performance. If you're risking 2%, 4%, 0.5%, you won't know how well you're really doing. Then of course, set your stop loss. You want to set it well below your support level. If you're looking to figure out exactly how to do this, I have many videos explaining how, for example, how to backtest, which you can find on my YouTube channel. Then you can set your take profit, for example, at resistance. And then you just need to let it do its thing. Don't move your stop loss, don't move your take profit. Just wait until it either hits your stop loss or your take profit. Then once the trade is closed, record the actual results, in other words, journal it, and review decisions. The best thing that you can do is use a trading journal so you can track everything. And while I have a free trading journal you can use, you can find it in the link in the description so that you can start the journal and do it all significantly more easily than you would if you were to use some sort of document or just write it manually or some sort of Excel spreadsheet, or just not do it at all like most people, which I don't recommend, by the way. Before you start clicking buttons though, let me share the 5 mistakes that destroy most beginners. Mistake number 1 is trading trading with no plan, which is basically just gambling. If you make this mistake, you're not going to succeed, or at least it's going to take you a long time for you to succeed because you'll eventually have to make a plan or quit. Mistake number 2 is risking too much. You start with too small of an account, or you're not making any money yet, so once you actually want to start the trade, you're going to risk way too much. This is why I recommend prop firms as well, because you're going to be risking very little but making more than enough to be motivated. Mistake number 3 is going to be over trading. This is where addiction can become dangerous, where you're going to see so many opportunities that you'll take 50 trades a day and you're just going to lose an account every single day because you don't know how to manage your risk, you don't know when to stop. Mistake number 4 is going to be ignoring the trend. Guys, if the market keeps going up and up and up and you keep selling and selling and selling, you're not going to do well. If the market keeps going down and you keep trying to buy, let's just say you're going to be losing way more than you win. It's just very simple logic. Mistake number 5 is not journaling your trades. If you don't journal, you're not going to succeed. Why? Because you're not tracking anything. So how do you know when something's working, when something isn't? You now know more than I did after 6 months of watching random YouTube videos. Here's your structured path forward. Your first 30 days is going to be your foundation. Week 1, you're going to have your demo set up and get familiar with it. Week 2, you're going to be practicing reading the charts and identifying patterns. Week 3, you're going to be doing your first 20 demo trades so that you can get familiar with clicking the right buttons at the right time and journaling. Then week 4, you're going to be reviewing and adjusting. Your focus is just going to be on learning, not earning. Your daily commitment here is going to be 30 to 60 minutes, really nothing crazy. Days 31 to 60 is where you build real skills and determine if trading is really for you. You need to develop one simple strategy. It's important for you to take 50 to 100 demo trades to make sure you're actually clicking the right buttons at the right time. Track everything in your journal, identify your strengths and weaknesses, join a trading community ideally so you can get feedback on what you're doing and make sure you're on the right path, and consider investing into your education so that you can move along even faster. Now, by day 90, you'll know if you're ready for the next level. Here's what that decision looks like. It's time for you to evaluate your demo results honestly. You need to assess your realistic time commitment on a daily and weekly basis so that you actually stay on track. You can start to consider a small live account or prop firm accounts. You need to plan your education path as well so that you have a clear path forward to continue learning and mastering your skill. And of course, set 1-year goals so that you know where you're actually going and you don't just stay in a loop forever. Congratulations, you've just completed your trading foundation. You understand the markets, the styles, how to read charts, and you have a clear 90-day plan. This puts you ahead of 90% of beginners who jump in blindly and just lose money. Your next video should be building a trading strategy that actually works. Now that you understand the basics, you need a repeatable system for finding profitable trades. I'll show you exactly how to develop, test, and implement a strategy that fits your personality and schedule. Click the video on screen, and let's turn your foundation into real skills.